Imagine paying twice as much just to check your credit score. That's exactly what's happening right now with FICO's new $10 price increase, and it could make getting a mortgage more expensive for everyone. Picture this. You're about to apply for a mortgage and you check your credit score only to find it costs $10 more than last year. That's not a hypothetical. FICO, the company behind 90% of mortgage lending decisions, just raised their prices. And this small change could have a massive ripple effect on your wallet. First, let's break down what FICO is. FICO stands for Fair Isaac Corporation, and they create the credit scores that lenders use to decide if you get a loan and at what interest rate. Over 90% of top lenders rely on FICO scores for mortgages, making them the gold standard in credit assessment. Now here's the shocker. FICO increased the price they charge lenders for each credit score pull by about $10. That might not sound like much, but lenders often pass these costs on to consumers. For a mortgage application where multiple checks are common, this could add up to $50 or more in extra fees. But it's not just about fees. Higher costs for lenders might lead them to tighten credit standards or raise interest rates slightly to compensate. Even a small rate increase on a $300,000 mortgage could cost you thousands over the life of the loan. So what can you do? First, don't panic. You can still check your credit score for free through many banks, credit cards, or services like Credit Karma. These often use Vantage Score, which is similar to FICO and gives you a good estimate without the cost. Second, focus on improving your credit health. Pay your bills on time, keep your credit utilization below 30%, and avoid opening new accounts before a mortgage application. A higher score can offset any potential rate increases from this price hike. Here's a retention hook. Did you know that a 20-point difference in your FICO score could save you over $20,000 in interest on a 30-year mortgage? That's why monitoring your score is crucial, especially now. Also, be aware that this price increase might affect other areas, like credit card applications or auto loans. Lenders across the board use FICO, so any cost change could trickle down. Stay informed by checking your credit reports annually for free at annualcreditreport.com. In the long term, consider building credit with diverse accounts, like a mix of credit cards and installment loans, and dispute any errors on your report promptly. The better your credit, the less vulnerable you are to market changes like this. To wrap up, FICO's $10 price shock is a reminder that credit costs are always evolving. By staying proactive with free score checks and good financial habits, you can navigate these changes and secure the best rates for your future. What's your biggest concern about this FICO price increase? Drop a comment below. I read every one and might feature your question in a future video. And if you found this helpful, hit like and subscribe for more credit tips every week.